Welcome back to the Trader Punk channel. I'm glad to have you here again. This week has been a real roller coaster ride. While I was able to successfully close my short trades in the DAX and EuroStoxx last week, pushing my trading account to a new all-time high, I unfortunately had to give back some of those gains by the end of the week. My new DAX short trade got stopped out, and I also attempted to buy the lows in the S&P 500, as well as take a small position in the micro Dow Jones. But these trades didn't work out either, and were stopped out with losses. As a result, I had to take some larger losses toward the end of the week. However, on Friday afternoon, I decided to open 2 new positions. Which ones they are and what my thought process behind these trades was, you'll find out right after the intro. Here we are back at my trading desk, where I try to transparently share my trades so you can follow the development of my trading account and see how my positions evolve. As you can see, my account currently sits at around $23,000, meaning I'm up 16.5% for the year so far. Right now, I have 2 open positions, a long trade in the S&P 500 future and a short trade in the DAX future. Combined, both positions are currently $500 in profit. Now, I'd like to take a closer look at these trades with you. Let's start with the DAX future, which I opened on Friday. I went short at 23,280 points, as we've seen a resistance zone forming around the 23,300 point mark. You can see that at the beginning of March, this level acted as a resistance, and after briefly exceeding that high, the market formed a first top before falling back into the range. I was already short at this level before, but I got stopped out after the second top formation, which resulted in a losing trade. Now the market has once again fallen back into the range, forming a double top pattern. Additionally, this double top was accompanied by a bearish engulfing candlestick pattern on the hourly chart, reinforcing my short bias. Initially, the trade moved in my favor, as you can see from the yellow arrow, but by Friday afternoon, the market bounced back toward my entry price. I quickly moved my stop loss up to minimize risk, and my take profit is currently set 17 points in profit. However, the market is now trading very close to my stop loss, making me less confident that this position will hold. It's a bit frustrating, as the trade was already well in profit, and I had hoped for a further drop towards the lower range boundary at 22,400 points. My overall idea was that after the strong rally from January and February, the DAX would take a breather and consolidate before potentially continuing its uptrend. I saw this resistance at 23,300 points as a good shorting opportunity, expecting a temporary pullback. However, as the market is now pushing back toward the highs, this trade might not play out as perfectly as expected. That's my DAX trade setup. Now let's see how it develops. Now let's discuss why I decided to go long at this level in the S&P 500. First, I want to take a look at the S&P 500 index chart before switching to the futures chart, where I placed my actual trade. In the purple box, we can see a key support zone, where the market previously found support in October and November 2024 and was able to continue its uptrend. Now, after this sharp sell-off, we have returned to this zone, forming what I would call a reversal candle or a hammer-like pattern, although whether it truly qualifies as a hammer is debatable. Additionally, on the daily chart, the market has also touched the 200 EMA, which serves as a strong moving average support. This further reinforces the idea that we are in a potentially significant support zone, just like in October and November. The big question now is whether this level will hold. I had already attempted long trades earlier in the week, as it looked like the market might start a recovery from this zone, but that didn't play out as expected. Now, I'm giving it another attempt at this key level. Switching to the futures chart, we can see that the support level here is slightly higher, which I've marked in purple. On Friday, we saw another reversal, where the market dipped into negative territory before closing positive. The question now is whether this rebound will continue. I have therefore opened a long trade at 5,765 and have placed a relatively aggressive stop loss at 5,717. I don't want to give the trade too much room if it doesn't work out and the market turns lower again. Buyers need to step in at this support level to push prices higher. If that doesn't happen and we break below the lows, I definitely don't want to be in the trade anymore. I'd rather take a small loss and move on. For now, my target is set at 5,970, but I'm not committed to keeping it there. I'll watch how the market develops before deciding whether to adjust my target. Additionally, we are now moving seasonally into mid-March, and historically, the period from mid-March to early May has shown strong bullish trends. This seasonality adds to my optimism that we could see a bounce after this extended sell-off. That being said, nothing is guaranteed in the markets. Anything can happen. The key is always to minimize risk and ensure that profits outweigh losses so that we maintain a positive expectancy in trading, allowing the account to grow consistently over time. And that brings us to the end of our 10th episode of the Road to 1 Million project. I hope I was able to give you some insight into my thought process and provide you with an update on my trading account. If you enjoy this content and want to keep following my journey, make sure to subscribe to the channel. Also, drop a comment and let me know if you were able to profit from the recent sell-off. I'd really appreciate it if you left a like on the video, and I'll see you in the next episode.